Do you want to see how a solid SPX 0DTE trading routine works in action? In this video, I'll walk you through a recent real trade that I took, explaining how I identified a bearish setup before the market opened, chose my strikes, and executed the trade with confidence. It was a quick one. If you're looking to streamline your 0DTE strategy, this is a must watch. So the first thing I want to point out is that on this particular day, it was Tuesday, January 14th, we did have a little bit of a gap up. And one of the things I like to do is kind of let the market open up a little bit. But we gapped up and I was looking for a bearish setup for the day. And I'll tell you why in just a minute, but let's talk through the strikes and things. We did gap up into this overbought zone. And so once the market looked to be retesting that opening high, I put on an out of the money call credit spread, 0DTE. I sold the 58.95, 59.05. This is a 10 wide spread for $1.90. I think the short strike was about a delta 30, give or take. I like to try to get in the morning for a 10 wide, I'm looking to get somewhere around $1.50 to $2. In the afternoon, you have to accept a little bit less credit because the time decay is really starting to kick in. But anyway, I had some room, and the idea here is I'm going to take $1.90 credit. If the market keeps going higher for some reason, then I'm going to stop myself out on a breach of that short strike. This is about a $5 credit. So I'm going to loosely say, I don't have a hard stop, if you will, a lot of times, but this is loosely a 150 to 200% stop based on that credit. So for those who trade 0DTE, you know what I'm talking about. So what I was looking for is typically 50% or better. And over the next couple bars, I entered here, we got a nice little pullback. And I was able to buy it back for $1.05. This is about 50% of the credit. So I was out in 15 minutes. Now in hindsight, I probably could have held this a little longer because we got a really big swoosh down. But let me show you why I was, before the open even occurred, why I was looking for a bearish setup. So before the market, I look at the alpha crunching forecast for the day. I like to look at the daily and the POF, which starts basically at 10:30. So typically I'm looking at the POF, which means at 10:30 a.m., which is about an hour after the open Eastern time. Over the last month, the general pattern, this is a time series analysis, the general pattern tends to be a slight bearish one. So if you look for SPX, over the past month, if you average out the moves, we tend to get a slight bearish lean, which is why I was looking for bearish setups. Now, I'm not trying to pick this exact peak and short here and then wait for 1140 and short again. I'm looking for a general direction. If there is one, some days there isn't one, but today there was a general bearish lean. So when the market opened and gapped up into this sort of overbought area, I thought, okay, now we're a little bit contrarian. Some people might call it scalping. I'm looking to sell that spread and, collect theta and look for a pullback. Now, this is why I'm not exactly expecting the entire market to be a nice fade all day. Let's look at the rest of the day. So we got a nice move down in the morning, but look at this huge midday rally. So I'm not trying to short this thing all the way down. I like to sell where it makes sense. And are we overbought? Are we oversold? Anything like that? Collect that credit, look for time decay or the move. In this case, we got a decent little move right away, so I took it out. But then we got a really huge bounce. So I definitely don't want to be shorting the lows, even though the forecast shows a general bearish lean. I'm not trying to stay short the entire day. We're looking to sell that premium, take profits at reasonable levels, 50% or so. And then I actually could have double dipped, but I decided to take the rest of the day off. But this actually would have been another decent setup as we were coming back into this overbought area. You could have sold another call credit spread and caught this whoosh as well. I only caught the first one and not even the full one, but this is my general routine now, is looking for what has the general pattern of the day been, and then look for common sense setups once the trading day begins. Hope it helps. See you in the next video.